Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today we are discussing an important topic that has recently been circulating among Iraqi dinar followers and foreign currency exchange communities. The focus of today's discussion is the difference between exchanging currency through a redemption center or specially trained redeeming bank versus going through a regular bank branch that may not process foreign currency on site. We are going to break down what this information could mean from a practical financial perspective, how banking procedures generally work in these situations, and why understanding the structure of currency exchange operations is important for anyone following developments related to the Iraqi dinar. According to the information currently being discussed, individuals exchanging through a redemption center or a bank branch that has trained staff may receive immediate access to their exchanged funds. Meanwhile, those who visit a standard bank branch that is not equipped for direct foreign currency processing could experience delays because the currency may need to be sent elsewhere for verification and authentication. This distinction is important because it highlights how financial institutions manage foreign currency transactions, security procedures, and anti-counterfeit verification systems. First, it is important to clarify what a redemption center or redeeming bank actually represents in practical banking terms. In many countries, large financial institutions operate specialized branches or departments that handle foreign currency exchanges, international transactions, and high-security cash operations. These locations typically have personnel who are specifically trained in identifying counterfeit currency, handling compliance requirements, and processing large or unusual currency transactions. In other words, the term redemption center may sound unfamiliar or dramatic to some viewers, but in reality, it often refers to a legitimate banking location with additional training and infrastructure dedicated to foreign currency operations. This is a critical point because there is often confusion online when people hear the phrase redemption center. Some assume it refers to a secretive or unusual operation outside of the traditional banking system. However, in most legitimate financial contexts, the process still takes place through regulated banking institutions operating under national and international financial laws. Banks handling foreign currency must comply with anti-money laundering regulations, identity verification requirements, transaction reporting standards, and counterfeit detection procedures. These are normal components of the international financial system. From an operational standpoint, instant access to funds can happen when a bank branch has the authority and technical capability to authenticate currency on site. If the bank can verify the legitimacy of the notes immediately using trained staff and specialized equipment, the exchange process becomes faster and more efficient. The customer may be able to complete the transaction in one visit and gain direct access to their funds shortly afterward, depending on the bank's policies and the nature of the transaction. On the other hand, a regular bank branch may not have the necessary equipment or expertise to process certain foreign currencies immediately. In such situations, the branch could send the currency to a regional processing center, treasury department, or another specialized banking facility for further inspection. This naturally introduces delays because the currency must be transported, verified, documented, and cleared before the transaction can be finalized. In global banking, this is not unusual. Similar procedures can occur with rare currencies, large cash transactions, or notes that require enhanced authentication. For Iraqi dinar followers, this discussion matters because it reinforces an important principle that is often overlooked in online speculation. The banking side of currency exchange is heavily dependent on operational logistics and institutional readiness. Even if a currency becomes more actively traded or more widely exchanged in the future, the ability of local bank branches to process transactions will vary significantly depending on training, infrastructure, liquidity availability, and regulatory compliance procedures. This also highlights the difference between online rumors and real-world banking practices. Many discussions within the dinar community focus almost entirely on exchange rates or speculative future values, but practical banking mechanics are equally important. If a financial institution does not regularly deal with a specific foreign currency, the process may naturally take longer. That delay alone does not necessarily indicate a problem with the currency itself. Instead, it often reflects internal banking procedures designed to reduce risk and ensure compliance. Another factor worth discussing is counterfeit detection. The information specifically mentions trained staff who can identify counterfeit currency. This is extremely important in international banking because foreign currencies can sometimes be targets for counterfeit activity, especially when there is significant public interest or speculative demand. Financial institutions must protect themselves from fraud, and that means employees handling foreign currency need specialized training. Banks typically use advanced authentication tools, including ultraviolet scanners, infrared detection systems, magnetic ink verification, watermark inspection, serial number tracking, and paper composition analysis. These measures are not unique to the Iraqi dinar. They are standard practices used globally for many foreign currencies, including the euro, British pound, Japanese yen, and others. When a bank branch lacks these tools or trained personnel, the safest option is often to send the currency to a centralized processing location. For IQD followers, understanding these operational realities may help create a more balanced perspective. There has long been strong interest in the Iraqi dinar due to Iraq's economic potential, oil resources, infrastructure rebuilding efforts, and monetary reform discussions. However, responsible analysis requires separating verified banking procedures from unrealistic speculation. Currency exchange operations are governed by financial regulations and institutional systems, not by rumors or emotionally driven narratives circulating online. Short-term discussions about redemption centers and trained exchange locations may increase public curiosity regarding how foreign currency exchanges are processed. Some individuals may begin contacting local banks to ask whether they handle Iraqi dinar exchanges directly or whether they route such transactions through external facilities. Financial institutions themselves may also review operational readiness if customer interest in certain foreign currencies increases over time. However, viewers should remember that banking policies vary widely between institutions and countries. One bank may process a transaction instantly, while another may require additional verification steps. Factors such as transaction size, customer history, compliance reviews, and regional banking regulations can all influence the timeline. There is no universal process that applies equally everywhere. Long-term, the broader significance of these discussions relates to Iraq's evolving financial system and international economic integration. Iraq has spent years working to modernize its banking infrastructure, strengthen electronic payment systems, reduce cash dependency, improve financial transparency, and align more closely with global financial standards. These reforms are important because international confidence in a country's financial system depends not only on economic resources, but also on institutional credibility and banking reliability. The Iraqi government and the Central Bank of Iraq have repeatedly emphasized efforts to stabilize the financial sector, strengthen currency management, and support economic diversification beyond oil revenues. These developments are closely watched by international investors, multinational companies, and financial institutions. A stronger and more transparent banking framework can improve Iraq's ability to participate in regional and global financial markets. At the same time, it is important not to overinterpret individual banking discussions as confirmation of major currency events. The existence of trained exchange locations or redemption-capable branches does not automatically signal a dramatic shift in currency value. Banks regularly train employees to handle foreign currencies because international commerce, travel, remittances, and investment activities require those services. Operational preparedness should not be confused with guaranteed financial outcomes. One of the most responsible approaches for IQD followers is to focus on verified economic indicators rather than rumors alone. Key areas to monitor include Iraq's foreign reserves, inflation trends, oil export performance, budget implementation, banking reforms, digital payment expansion, and international trade partnerships. These are the types of measurable economic fundamentals that influence long-term financial stability. For example, Iraq's oil sector remains central to government revenue generation. Fluctuations in global energy prices can significantly impact Iraq's fiscal position, public spending capacity, and economic planning. Higher oil revenues may support infrastructure projects and reserve accumulation, while lower oil prices can create budgetary pressures. Currency stability is closely connected to these broader macroeconomic realities. Another important factor is investor confidence. International investors generally seek predictable regulatory environments, transparent financial reporting, and stable monetary policies. Iraq's ability to attract foreign investment depends heavily on improvements in governance, banking efficiency, and economic diversification. These structural reforms often develop gradually over time, rather than through sudden overnight transformations. For everyday viewers following Iraqi dinar developments, patience and critical thinking remain essential. The financial world is complex, and legitimate currency movements are usually influenced by a combination of economic data, monetary policy decisions, geopolitical stability, trade relationships, and institutional reforms. Responsible analysis means evaluating information carefully and avoiding assumptions that cannot be independently verified. The conversation around redemption centers also demonstrates how financial terminology can sometimes create confusion. In practice, specialized currency exchange facilities are not uncommon within large banking systems. Major banks often centralize expertise in certain branches to improve efficiency and reduce fraud risks. Customers dealing with uncommon foreign currencies may naturally experience different processing timelines, depending on where they conduct the transaction. It is also worth noting that electronic banking technology continues to reshape international currency exchange processes. Many financial institutions now rely on centralized digital verification systems, real-time compliance monitoring, and automated transaction reporting tools. As Iraq continues modernizing its banking sector, digital integration could play an increasingly important role in improving transaction speed, transparency, and international compatibility. Another angle to consider is public perception. Discussions about instant access versus delayed access can influence expectations within the dinar community. Some people may interpret faster processing as evidence of growing institutional readiness or increased international recognition of the currency, while operational improvements can certainly reflect banking modernization. Viewers should remain careful not to draw exaggerated conclusions from isolated reports. Financial history shows that currency valuation changes are usually gradual and influenced by long-term economic conditions rather than isolated banking procedures. Countries that strengthen their currencies over time often do so through sustained economic growth, disciplined monetary policy, productive investment, export expansion, and institutional stability. These processes take time and involve many interconnected factors. For Iraq specifically, ongoing reconstruction efforts, energy development projects, regional trade initiatives, and infrastructure modernization remain important themes to watch. The country possesses significant economic potential due to its natural resources and strategic geographic position. However, translating potential into sustained financial strength requires continued reform, stability, and effective governance. Banking modernization itself is a positive sign because efficient financial systems are critical for economic development. When banks improve compliance capabilities, strengthen anti-fraud systems, expand digital services, and train personnel in international financial procedures, it can enhance overall confidence in the financial sector. This benefits not only foreign currency exchange operations, but also domestic commerce, investment activity, and economic participation. At the same time, responsible viewers should avoid making financial decisions based solely on speculation circulating through online communities. Every investment carries risk, and foreign currency markets can be highly unpredictable. Market conditions change over time, and no single report or rumor can guarantee future currency performance. Careful research and diversified financial planning are always important. The practical takeaway from this latest discussion is relatively straightforward. Some banks or specialized branches may process foreign currency exchanges more quickly because they have trained personnel and direct verification capabilities. Other banks may require additional time because they send currency to specialized processing facilities. This reflects operational differences within the banking industry rather than definitive proof of extraordinary financial events. For Iraqi Dinar followers, the most valuable approach is staying informed through balanced analysis and verified economic developments. Iraq's economy continues evolving, and there are legitimate areas of progress worth monitoring, including banking reform efforts, reserve management, infrastructure investment, and international financial cooperation. However, realistic expectations and factual analysis remain essential. In the months ahead, attention will likely continue focusing on Iraq's monetary policy direction, government budget implementation, oil market conditions, and broader regional economic trends. These factors collectively shape investor sentiment and long-term financial stability. Viewers who approach the topic with patience and analytical thinking are better positioned to understand the bigger economic picture rather than reacting emotionally to isolated claims. Ultimately, discussions about redemption centers and exchange procedures remind us that banking operations are deeply connected to regulation, security, and institutional structure. Currency exchange is not simply about the notes themselves. It involves verification systems, compliance standards, liquidity management, and risk control procedures that operate behind the scenes of the financial industry every day. As always, our goal is to provide responsible, factual, and balanced coverage of Iraqi dinar developments and Iraq's economy without sensationalism or unrealistic promises. There is strong public interest in Iraq's financial future, and it is important to approach the subject with professionalism, patience, and careful analysis grounded in economic reality. Thank you for watching today's update. If you appreciate responsible and factual Iraqi dinar news coverage, make sure to subscribe to the channel and like the video so you can stay informed on future developments involving Iraq's economy, banking sector, and currency-related news. And as always, please remember that this content is provided for informational and educational purposes only and should not be considered financial, investment, or trading advice.